Hey girls, and welcome back. So we know that it's usually the guys who make the first move. It's usually the guys who prepare and think about the dates, the guys who get down on one knee and propose. But today we are welcoming you in graciously to the 21st century, where it is you, the girl, the ladies, the woman in the relationship who are going to make the moves.
And by now, you already have been the Bachelorette, the Bachelor for the past 2 episodes of The Bachelor in Money Paradise, and you know which investments are your lucky choice. You know which are right for you. So now we're taking action. We're learning how to place trades and really make some moves.
So starting with the first step in order to place that trade is to make sure that you have a brokerage account, to make sure that you have downloaded the app of your brokerage firm and you are ready to place that trade.
Perfect. So if you haven't already, stop this video right now, download the app, and then just go ahead and do step number 2, which is to log in. If you don't know your username and password,
Problematic.
We really can't help you there, but like you could do forget your password, I don't know, forget your username.
Figure it out.
Jinx. Okay, so now that you are logged in, you will see on the bottom of your screen that you have a lot of options of where you can go. And what we want you to focus on, at least on my app, it's the middle. What about yours?
Mine, it's like more, it's like 1, 2, 3. It says trade and then it says more. So you're gonna obviously click
trade, because that's exactly what we're doing here. You are gonna click on it and it will bring you to a brand new screen.
Okay, so once you get to that new screen, there's gonna be a search bar that looks like Google, Bing, Yahoo, whatever you want. It's a search bar, you girls know what that is. And it's gonna ask you for a symbol or a ticker. What does that mean? Every company, every stock, every ETF, every mutual fund has what they call a symbol or a ticker that represents that name. It's like a nickname. So for example, let's take Amazon, right? Instead of spelling out Amazon, which is so long, I know.
You can't spell it out though. You can. Like if you know, I don't know the ticker, but you just know you want to invest in Amazon, they'll recognize it.
Yeah. Or if you want to be like savvy and investing sling, you could just type in the ticker or the symbol, which are interchangeable words. And for example, Amazon is AMZN, Apple's ticker is AAPL, and so on and so forth. If you don't know it, like Tali said, just type in the company, type in the ETF, and it will pop right up for you.
You're good. And now they're going to ask you for an action. In this case, if you are buying a stock, you're going to click on
buy.
If you are selling a stock, you are gonna
sell.
Okay, great. But for this example, we are going to be buying what Warren Buffett, who is an investing king, says is probably the best investment most Americans can make. It is a low-cost ETF that tracks the S&P 500.
So the S&P 500 stands for Standard & Poor 500. Standard & Poor no one really uses. S&P is definitely the lingo. It's more hip, it's more cool. But basically, it's an index that tracks the market. The top 500 stocks or companies within the market.
So when we are buying an ETF that tracks the S&P 500, we are basically saying we want to be invested in the top 500 companies
in the market.
It's pretty cool. Like that's pretty cool. So that's what we're doing right now. Let's say we write the ticker SPY. There are a bunch. You don't need to go with that. We click on buy.
Okay, so after you click on buy, step number 4 is to choose what type of order you're placing. And there are 2 options. The first one is a market order. Your market order is saying, I want to buy it right now at whatever price it is in the market. It could be, first of all, it ranges throughout the day. Every second of the day, it's going to be trading at different prices. And if you remember, that's that really cool word we taught you last time, volatile.
And your second option is a limit order. What is a limit order? A limit order is saying, I know I want to invest in this stock, this ETF, but I'm a bargain hunter. I go to TJ Maxx for every single purchase. You think I'm gonna buy it at the price right now? Heaven forbid. I'm gonna put in a limit order and say, this stock right now is at 80. If it goes down to 78, then place my order. But I'm not buying it for 80 right now.
It's like getting it full price when you can get it at a discount.
But also understand that it might never reach 78. So you're taking a little bit of a risk. If you really wanna buy that stock, just buy it at 80.
I'm going to relate this to a shopping analogy because shopping just makes everything better. I know. Stay with me. So you see a sweater, it's brand new, fresh out of the collection, fall collection, winter collection, and you are like, I need it. I cannot wait for the sale. I want it right now, full price, I'm getting it. And that is exactly what a market order is. You're saying, I don't know if it's going to go up, I don't know if it's going to go down, I don't care, I need this for my wardrobe ASAP, and you buy it.
But a limit order is seeing that sweater, being like, I love it so much and I want to buy it, but I'm gonna wait for a sale. I'm gonna wait until 2 weeks, I'm gonna come back and buy it on sale. And you have 2 outcomes with this. Let's say you come back in 2 weeks, you go to the store and it totally backfired because not only is it not on sale, it's sold out.
And listen, the stock market, stocks, they don't sell out. But the point that Tali's trying to make is saying that
maybe it went higher.
Not only did it not go on sale, but the product, the service, or whatever it is was doing so well that they said, you know what, $50, not enough. We could be charging $75. So you waited for the sale. Not only is it not at $50 anymore, it's now higher. But there's a third option with a limit order, and that is that you strongly believe it's gonna go on sale. So instead of buying that sweater at $50, you're gonna say, absolutely not, I'm waiting. I know at some point it will go down, and therefore I'm gonna put in a limit order, which is if and when it hits this sale price, right away I want you to buy it, right away. And that's exactly how it relates to the market.
But imagine you come back to the store and you bought the sweater at $40. You were like, sick, 20% off. And a month after that, it's 70% off.
It happens. Limit orders are scary. You know what I mean? Like you think, and that's why we say you should never try and time the market, because you think $50 is too high, but $40 is good. Listen, it might fall to $40. 2 weeks later, it might have fallen to $30. You never know. But on the opposite end, you could think it's gonna drop from 50 to 40, and really it jumps from 50 to 65, and you just missed a huge rise in the market.
It's just a give and it's a take. Sometimes you win, sometimes you don't. Okay, so the next step is to put in the quantity, how many shares you want to buy. Very simply, if you are investing $1,000 and the stock is $100, how many shares you buying?
Wait, I missed that. What?
$1,000 to invest, the stock is $100 a share.
10 shares. That was very fast.
It's getting better.
Okay, but you don't need to be good at math, because most brokerage account apps, if you don't have a brokerage account, check out our description below. We put a link there because you need to have it if you're watching this video.
Come on.
But let's say you have $1,000 and you have absolutely no idea how many shares that can buy, because the share is what?
Like $187. And how many times does that fit in?
That's a random number. Like you have no idea how many shares you can buy. Guess what? You could put into your investment calculator, which usually is on the app right near quantity, and you could say how much money you're willing to invest. It will do all the calculations for you. On the left side of my app, it pops up. It might say 13 shares, 10 shares, 8 shares, whatever it is. It does it for you.
And our last step when it comes to placing a trade is choosing the timing of your order. The default is day only, meaning you're placing it during this day.
Or if you're using a limit order, there's so many different other categories, so many different options, which we get into outside of the crash course. But for the crash course, all you need to know is good till canceled. And all that means is you're setting this limit order. Maybe you think that sweater is going to go from 50 to 42, but it doesn't happen today. And it doesn't happen tomorrow or the next day. It happens in a week and a half. Guess what? If you click good till canceled, that order, that limit order will go through forever. It's going to be good until it's canceled. Versus the day, which is if it doesn't hit my limit today, scratch it, forget about it. Pretend it never happened, pretend that sweater was never there.
So if you put in a limit order that you want to buy a stock when it hits $60, and it only hits $60 in 3 months, if you hit good till canceled in 3 months,
it will go through.
It will complete. Congratulations. 3 months later, but better late than never.
But after that, guess what? You are all done. All you got to do, the last step, place your trade. And that can be different for every single app. It's going to be pretty clear what button you're going to need to press. But congratulations, you have pressed your first trade. You are very close to graduation.
Okay, thank you guys so much. We hope that you are now empowered to make your first or second or third or 100th trade today.
Knock down that wall. If you were intimidated before, you now see how easy it is. Do not be afraid. Do not let the fear stop you.
Thank you so much for watching, and we'll see you in our next video.
Bye.